and take your questions on the economy and finance to Susan Li of Fox Business Network. Susan, great to have you with us tonight.
Great to see you, Shannon.
Okay, so the president says he thinks the economy will get roaring again once things reopen. Now, here's what the Lieutenant Governor of Ohio, Jon Husted, had to say.
I want to ask about unemployment and if the state is going to continue to offer it under the current rules as we begin to gradually open up.
The reality is that even when you open things back up, it's not going to come back fast. It's not like on May 1 that the things that open up that it's just going to pop back like you're throwing on a light switch. This is going to go very, very gradually.
I mean, Susan, what is sort of a realistic outlook for us? I mean, all states are going to open in different ways. There are going to be certain restrictions along the way. So not every employee will be hired back right away. Not every business will go full throttle. What should we try to realistically plan for?
Well, the average Wall Street economist forecasts that we will go through some near-term economic pain, at least in the first 6 months of this year. So we're looking at shrinkage of maybe 3% in the first quarter. And then from March to June, a quarter, 25% of the U.S. economy will likely disappear. But then they're looking for a rebound in the back half, looking for maybe 6% growth in the last 6 months of this year. If you take a look at the stock market action, Shannon, and which is usually a leading indicator, meaning where investors see the economy 6 to 8 months out, given that we're just 15% away from record highs, I think investors are hoping and betting for a rebound in the U.S. economy.
Okay, you're kind enough to take some questions. We asked folks to tweet in what they're thinking about, what's on their mind in the fields of economy and finance. Seth Baker tweets in and says, what are your favorite technical indicators?
Wow, very financially savvy your viewers are. So Shannon, I would say that my favorite indicator is probably the 10-year yield, which is what your mortgage rate is based on, by the way. And the reason I like it is because bond markets are 79% bigger than the stock market. And that's why people say that the bond market is probably smarter than stock markets. And right now you're looking at the yields. It really hasn't budged, despite the fact that we lifted 30% off those end of March lows in the stock market. So that goes to show that there's still a bit of caution out there.
Okay, next up we have a tweet from Sarah Mabe, and she says, you should know about, I think we're missing a word here, but about low-income earners and how we can best go forward. My family makes under $25,000 a year. So in these times, what are my best options to get ahead since we're already living paycheck to paycheck? Thanks. And I think she just wants to know, what's your best advice? Because this is the truth for a lot of folks out there. I mean, they've lost their job. They were already really just basically holding on. What can they do now?
Well, 80 million of these $1,200 stimulus checks have been sent out. You get $500 for every child under 17 that's dependent. Also, there's a lot of forbearance programs that you can tap as well, meaning that you get more time to pay off your credit card bills, maybe some rent freezes and some relief on the mortgages. But if you really have to find some cash somewhere, I guess your final alternative might be to look at your 401k, because there is some relief there where you can take out $100,000. You still have to pay the interest, but you get 3 years to pay it all back without any penalty.
Okay, so a lot of different options to look towards. Tweet from John MC says, does Wall Street expect an American groundswell en masse to buy fewer Chinese goods? Are you seeing that now?
We are seeing it now. So in the first quarter, the first 3 months of this year, we saw the Chinese exports here to the U.S. fall by 25%. But I would argue that the longer term impact might be the amount of manufacturing that U.S. companies do in China. A lot of experts say that because of this coronavirus COVID pandemic spread, that a lot of people have been rethinking their supply chains and might be taking their production and then manufacturing out of China, which, as you know, is more of a longer term impact than just immediate purchases of goods.
Yeah, and I think it was Japan, may have been one of the countries that I saw that they're offering financial incentives for their companies to bring their operations out of China and back into Japan. We'll see if something like that were to happen here. Try to sneak one last one in from Gary. He says, with the government printing money like it's going out of style, how long before the problem of inflation, like we experienced in the late 70s and 80s, will reappear? And by the way, Susan, he says, I know you weren't born yet when this is happening, but you might have studied the subject.
Well, okay, so after 2009, we actually saw prices fall, meaning deflation, because when people are out of work, they can't afford to pay higher prices. But we haven't seen that much inflation over the 10 years since 2008. So no, I don't think that even money printing will mean much higher prices, at least immediately.
Okay. Susan Li of Fox Business Network, thank you for being up late with us and answering some questions. We appreciate it. Okay.